A warm welcome to the latest newsletter from Trade the Easy Way. Hello traders, this is Mike Hamilton for Trade the Easy Way, and on my weekend preparation I just want to share with you what I'm seeing on these indices. So it's very easy to say, okay, the indices have had a tough week, they've closed lower, well yeah, it's all going to crumble and down we come. Well, let's just take it easy for a moment and just analyze these charts. The first thing I want to look at is the weekly. This is the S&P weekly, and all we've done so far is come down and sat on this trend line, and you will note that we are still holding the May 2015 highs. We have not closed underneath it, so we have got a little hot and we are coming off, but we are not necessarily going to roll over. Yeah, I think we've had this distribution pattern here, a couple of weeks, 2-3 weeks of buying, and then we come lower down here. But we are right on this trend line, so we may come lower. I think we could easily come down and get this stochastic coming lower. But I think we have got further to go. I think perhaps if we come low for another week or two, then we may pick up. Now we've got a very interesting week on the data front. We've got UK inflation, UK jobs, we've got ECB rates, and we've got US inflation, and a few other important announcements for the US. So let's go to the daily on the S&Ps, and you can see that we are just coming into, where have I got these? Okay, sorry, hesitating there because I've got the fibs on the May high and this year's lows, and you can see, yes, we were distributing up here. So from July and August, when you traditionally get incredibly low volume, we dipped into September, and then here we are, we're just sort of holding these summer lows. So all the time we're holding these summer lows, we stand a chance of moving sideways and then popping back up. We're basically in a big box on this daily. There's the box, and we are at the lower end of the box, so we might well come and touch 2100. Typically in boxes you will get proper tests of the box, and then if they hold, you'll get buyers coming in and taking it at least back to the middle of the box and potentially breaking up. Alright, so I think we have got some lower levels to come, but overall I think these markets are still bullish, and these S&P monthlies, all we've got to do on the monthly chart for my money is hold 2060 on this level here, and then I think we can push higher into the back end of the year. Okay, but if we, in 2 weeks time, if we can't, if we are still closing lower under 2100, then obviously that is a different matter. So as usual, Monday's close is going to be crucial. Yeah, we're just operating in quite a narrow range at the moment on the last second half of last week anyway. And so watch this space. I think we could move into 2155 and then come down to the bottom of the box. And that goes for the Dow as well. Dow is a much clearer box on the daily. Like I said, another decent test under 17.9, and that might bring the buyers back and then bring us back up to the top of the box at least. And it's a question of then whether we got the momentum to break higher. I think this is all about the dollar. If you look at the 10-year Treasury notes, US Treasury notes, this is acting as if there's a rate rise coming. As money comes out of the bonds, and the bond market is anticipating a rate rise. So yields are rising while the price of the bonds are dropping. So there's a divergent relationship with the yields, and that's a sure sign that the markets appear to be convinced that there's a rate rise coming. They were too hot anyway. If you look at this weekly chart, yeah, it's clearly the third touch of that trend line, which is very, very clean setup and very typical in the markets as well. Okay, so I think the next test is 126.90. Look at gold, keeping the theme of the dollar. We are right on the edge here. Had a very flat week. So I think any drift upwards, bearing in mind we've got US and UK inflation this week, I think any drift upwards into this seller's bar here will be met with selling. So if you are swing trade short, you've got an option of, if you want to stay in this, I think you have to keep your stop higher. Otherwise, you might want to take profits. And the stochastics are very low. But look as if the MACD is crossing here, coming up to the midline of the MACD. But overall, I'm bearish. I just think it might pop up a little higher before we get the next leg down, which is typical in the consolidation pattern. If you note this period here, we had quite a big selling day, then we drifted higher into that bar, and then before we got the next leg down. So I think we might drift into that bar, drift closer to 1280, 1300, and then get the next leg down. Alright, so weekly, you can see the weekly was very, very flat on here, on this bar here, on this chart here. Right, so let's look at the euro. There's the weekly breaking down this trend line support. There's the monthly looking very fragile up here anyway, and here's the daily with that charge down early part of the week, consolidation, and then another drop into the end of the week. So I think we are potentially going to come down to 108, 106, but I would, where's the best place to get short? Well, I would ideally want to get short up here on a retest of 111 again. I mean, the chart suggests we may only see 110. But yeah, any spike higher. Bear in mind we've got ECB on Thursday. Any spike higher is I'm going to be shorting. So over to you on what you do with that. But I'll report back on that and suggest levels as the week unfolds. So there's no trading room tomorrow for members. We've got Traders Roundtable on Monday night. On Traders Roundtable we are talking about Elliott Wave. I'm going to give a short presentation on Elliott Wave because I think that is a crucial part of my trading and it should be a crucial part of yours. This is the pound on the daily chart, and look how we are at the 127 extension holding. We had slightly higher, we had a hammer light bar on Thursday and then drifting lower into the actual fib level 191 on Friday. I think there's a chance we could at least get a push higher here. Yeah, this extreme drop here from high 150 down here to currently 122 is putting a lot of upward pressure on UK inflation, or at least I think that we'll start to see upward pressure on UK inflation, and I think that would give the pound a good potential to push higher as we head towards a potential rate rise in the US. So that's what I'm looking for in that one. I'm going to leave that there because I'm going to save detail for members for Traders Roundtable. But yeah, that's what I'm seeing at the moment. The pound US was lower, of course, last week, and the monthly chart is there, getting pretty low on stochastics and MACD as you'd expect. All right, so I'm certainly not bullish on the pound with that sort of pattern we've got at the moment, but I'm just looking for any signals in the first half of the week that we may get at least a bounce. Okay, this is clearly in a downtrend, so the last thing I'm going to do is start buying this at this level because the trend could so clearly head down. I'll give you more detail of my thoughts and drill down into the 1 and 4 hour Traders Round Table and talk to you about Elliott Wave in the context of this pound. Okay, so expecting some selling pressure in the early part of the week, but looking for some support levels in these indices to see if they may hold as the week unfolds. Alright, enjoy what's left of your weekend. If you're interested in getting the premium video and joining us in the live trading room, Traders Round Table, then drop me a line. Look forward to hearing from you, and bye for now.